Hello everyone, and welcome to this presentation of the 3 key strategy rules. Now I'm excited about today's class because I'm going to be giving you 3 of the rules to one of our most popular as well as consistent strategies in our brand new elite stock trading college. When I say brand new, I really mean more revised and updated because we've only given this course once before in our history, and so we're refurbishing it and giving you the best of the best as well as some extra added bonuses. So I'm excited to talk about it today as well as share these 3 rules that are going to be included in one of the strategies. And I want to welcome you once again. My name is Stephen Primo. If you're not familiar with our webinars or with our website, Specialist Trading, I'm the president and founder of Specialist Trading. I've been trading for nearly 40 years. I started out trading on the floor of the Pacific Stock Exchange, so my background is in stocks. I was on the floor for a total of 16 years, and 9 of them I was a specialist for Donald Lufkin and Jen Rett. A specialist simply means that if you ever look at the old pictures of the people yelling and screaming on the trading floor, making all these weird hand signals and walking in tons of paper on the floor, specialists were just those traders that made markets in roughly about 50 stocks. So if you wanted to purchase or sell a particular equity, you had to go to the trader who specialized in those. So that's what I did for 9 years. I made markets in waste management, US Air. I was a assistant market maker in IBM, and I traded through the crash of 1987 and the bull market that followed. So I've been around and accustomed to every market environment imaginable, and I've traded through every market imaginable and every strategy and system around. So I know what works in terms of consistency, and I know what doesn't. So this is what we do with Specialist Trading. We provide all of the tips and techniques I've accumulated in my nearly 40 years, and we give them to our students so that ultimately you can make your own decisions. You see, this is not the type of course or company where we just want to simply force feed you signals on a nightly basis where we tell you what to buy, what to sell. We tell you what the perfect time frame is, what the perfect market is. We really don't believe in that. In fact, it's our belief that that's a recipe for a disaster. That's the reason why most traders fail. You're taking your cue from someone or something else, and you're really not a part of the process. In my nearly 40 years of trading, I have found that the only way you can become a consistent trader is by becoming a part of the process. So that's what we do. We give you all the keys to be able to do that, and then basically leave you on your own and let you be in charge of your own trading destiny. Okay, so that's what we do at Specialist Trading. I'm going to share with you 3 of the rules that are in one of our best strategies that I'm going to be talking about in the Elite Stock Trader College. But before we do that, before we begin today's presentation, we're required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 key rules as well as the strategy that it pertains to. But please remember that we can in no way guarantee that any of the rules I'm about to present or any of the results will be repeated in the future. So please take a moment to view our disclaimer. And while you're doing that, I'd also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there at SPCLSTTRADG. I post free information on a daily basis. 2 days ago, I posted a sell signal that one of our strategies generated, and you can see the market fell down the last couple of days. The E-mini had profits of nearly 50 points or $2,500 per contract using this signal that was generated by one of our strategies. So there's a lot of great free information on Twitter, although it is rather limited because of the format. So if you're interested in getting more detailed information, such as videos or a lot of written copy, our sister site, which is Pro Trader Strategies, has put together a Facebook page for us. So simply log on to Facebook or Pro Trader Strategies, and there's a lot of educational videos and more educational tools to find out about who we are and what we do. Okay, now as I stated, we are first and foremost an educational company. And the reason why I say this is because I've made no secret about it. If you've heard my presentations before, my first year or 2, I struggled tremendously on the floor. I really could not make ends meet. I was basically, at best, just treading water, breaking even. And I didn't think I was going to be a trader much longer on the floor because I wasn't producing any results. I was lucky enough to come in contact with my own personal mentors. These were specialists themselves who had roughly about 40 years experience each behind them. And they really taught me and showed me the same things that I teach and mentor with my students. So this is why I say it is an educational company, because it's all about learning the things that are successful, that have a certain amount of consistency, and then applying them, but trusting your own instincts, trusting your own trading plan, rather than trusting what someone or something is telling you what to do. You know, we don't believe in getting your answers from a chat room or from some trading guru on TV or from listening to news events. Everything you need to know is basically right in front of you. The difference is that we've never been taught to listen to that, which is the market we're trading. We're always taught to listen to outside sources. So my job as your instructor, as your mentor, is to teach you how to listen to the market. So this is what I learned trading on the floor of the exchange. When I was struggling tremendously, this is what my mentors taught me. They said, Steve, successful trading should be non-subjective. So what do we mean by that? Well, it means that two traders looking at the same chart or the same scenario should come up with the same exact reference for trading. In other words, two people shouldn't be looking at a chart and say, well, I think it's going up according to these rules I've learned, and someone saying, no, it should be going down. Or listening to a news event that comes out, either jobless claims or some economic report or earnings, and someone saying, oh, that's positive. Someone saying, no, that's very negative. See, that's too subjective. We want trading to be cut and dry. If something is that subjective, where two people are looking at the same support and resistance and coming up with entirely different answers, well, then it's not consistent. It can't be consistent because there's too much room for interpretation. So we want things to be very cut and dry, where two traders would look at the same chart and come up with the same exact results and know what to do. Secondly, they said trading should be consistent. Now, obviously, everyone wants to be consistent, but what does this mean? Well, it means that you shouldn't think that it's going to produce home runs each and every trade. You know, consistency just doesn't mean about having a winning track record. It means also that you're going to be losing from time to time. All of our strategies have minor losses from time to time, but it's not about the losses, it's about the resiliency if they can make it back. In other words, what we're looking for is a 2 steps forward, 1 step back approach. We're not looking for tons and tons and tons of small winning trades and then one large humongous loss that wipes out everything. That's not consistency. We're looking for 2 steps forward, 1 step back. That really is the meaning of consistency. They also said that successful trading should be as simple as possible. Now, go back and think about your own trading plan or some of the courses you've purchased or trading mentors you've had in the past. If they've traded, or if you've noticed anyone who's been trading for a relatively short time, and that can be from 5 to 10 years, most of their trading plans are extremely complicated. You know, they have these convoluted logic, tons of requirements that must be met, or a lot of indicators, or lots of proprietary tools. But if you look at the traders who've been trading 30, 40, 50 years down the road, most of their plans are extremely simple, maybe 3, 4, 5 rules tops, okay? So that's what you should be going after, because by the very fact that these traders are still trading means that something is working. So keep things as simple as possible. It wasn't until I started to release all of what my mentors called useless noise, you know, tons of indicators, listening to news, subscribing to tons of trading gurus newsletters. The minute I started releasing those things, that's when my trading started to become consistent. So keep your trading as simple as possible. And today, in today's presentation, when I show you these 3 rules, you'll see how simple trading can really be. And then lastly, and most importantly, my mentors taught me that trading should make you a part of the process. All right, and this is what we mean by taking your cue and being involved in the decision-making process. In other words, you shouldn't be taking your cue from some nightly signal report. You shouldn't be taking your cue to trade from someone in a chat room. You shouldn't be taking your cue to make decisions off what news report is coming out on TV or what someone is telling you on TV. These are all recipes for disaster. If they work so well, why do upwards of 80% of all traders fail? Okay, because there's no consistency in that, because by you relying on them to tell you what or how to trade or what market to trade, you're basically saying to the market, I don't know what I'm doing. I have no idea. And so since I don't trust myself and I'm not good enough to be a trader, I'm going to let you guys tell me what to do. And I'm not saying this to be, put down on you or to be too aggressive or too condescending. I'm saying this from firsthand experience because this is the way I used to trade. I wanted to take all of my trading decisions from an outside source. And guess what? It couldn't make me any money. So once I started to become a part of the process, once I started to include all of these techniques and different categories into my trading, That's when I started to become consistent. So this is what successful trading is, and this is what we're going to teach you in our Elite Stock Trading course. We're going to teach you all of these different categories, but most importantly, how you should be a part of the process, and we're going to teach you how to be a part of the trading process so that ultimately, once the course is over and you have some mentoring with me and some back and forth of corresponding, you'll be comfortable enough to say, you know what? I've got it. I can do this on my own now. I don't have to spend all this time and money and energy on monthly signals or monthly chat room costs or continuing education. I know how to do it. We have tons of testimonials from traders who have told us that for the very first time, they've been able to do it on their own. So this is what we are offering you in our elite course, okay? Now, before we begin with today's class, I know many of you who have never seen me speak before may have questions and want to ask every time you see something that doesn't make sense or is a little bit complicated for you. Please kindly hold off and wait till the very end to ask any questions, okay? I promise I will answer each and every question at the very end of today's class, but just give me time to go through the presentation, and many times your question is answered in the next slide, okay? So the only question I will answer is the most common one, and is this being recorded? Yes, it is. All of our presentations are recorded, so if you have to leave early or if you're having technical difficulties, you can't hear something or your computer goes out, just contact Pro Trader Strategies. We will send you a link to this presentation. All right, so let's begin now with today's class. And once again, as an educational instructor, as your mentor, my goal is to teach you, not to trade for you, not to blindly tell you what to buy or sell, but to teach you how to trade with the specialist edge. This is the same edge that was taught to me. This is the same edge that turned my trading around, and this is what I try to instill in all of my students. All right, so here's the curriculum in our stock college, just going off the bat, all right? It's going to be 6 weeks of live education. The first week is we're going to go over the basic foundation and the building blocks of stock trading. You're going to really see what our philosophy is. As you can probably tell, we're a little bit different from most educational companies, just from the first opening statement I made. We don't really believe or rely on a lot of what other traders believe and rely on. So I'm going to explain in detail our philosophy and our concepts behind stock trading. Then in week 2, we'll go into probably the most popular and consistent strategy we have, which is stock strategy number 4. We'll go over all the rules, we'll go over all the different examples, show you how to implement it. The next week, we'll go over probably one of the most underrated stock strategies we have at Specialist Trading. That's strategy number 8. Now, whereas strategy number 4 is a pattern recognition strategy, strategy number 8 is an indicator-based strategy, but it only relies on one indicator. Week number 4, we'll go over to probably one of the most popular tools we have at Specialist Trading. That's the PET-D. The PET-D is included in the course. For those of you who have heard about it or have been interested in acquiring the PET-D, that comes with the course. So the PET-D is a directional tool. It is probably one of the best tools that I was ever able to get from the trading floor. It was a formula I was introduced to on the trading floor that is basically just a directional tool, but it is the most finely tuned directional tool I've ever worked with. So it tells you many times in advance when a trend is about to begin. So if you ever wanted to really be in sync with the trend, the PET-D is a great tool, and it comes included in the course. Now, week 5, we're going to devote to option trading. We know a lot of you out there who have told us in the past, says, Steve, we love your trading, we love your methods, but I don't particularly purchase stocks or futures or currency pairs. I'm an option trader. So we're going to devote the entire week, week 5, to how to apply our strategies with options. So for all of you people who feel like, well, you know, I'm not really sure I want to take this because I don't really purchase or sell stocks, that's okay. We'll tell you exactly how to apply options with this. And finally, in week number 6, well, we're going to put it all together with our advanced trade management method. This is something we only include in all of our courses. So this is not something you can purchase on its own or individually. This is another technique I was introduced to on the floor, which is probably one that has saved me so much money because it tells me when I should be trading my strategy and when I shouldn't. So we're going to put it all together with advanced trade management. We'll go over any questions that you may have. And once again, these are all live classes, so we're going to be conducting these just as we're doing right now over GoToWebinar, and we're going to be having live interaction with each other, so you can see charts and you can also hear me speaking to the class. All right, so let's start with strategies because I know that's what you're all interested in. Everyone wants to get a strategy, and we're going to start out with strategy number 4. Once again, our most popular as well as most consistent strategy. Also, the best thing about this strategy is you can trade it any market, any time frame, any direction. Now, if you're interested in trading stocks like this, letter O, okay, someone looking at this would say, boy, you know, this thing had a tremendous run-up coming into February. Look at this stock. Even when the market fell out of bed a few weeks ago, this stock kept going up. How come I wasn't able to catch this big, nice move? Well, here are the type of signals that you could have caught had you already been a member of the Elite Stock College and had strategy number 4, because strategy number 4 has been generating signals all along the way, okay? Now, it just doesn't generate buy signals. You can also get sell signals as well. Now we go on to our next strategy, which is strategy number 8. The difference between strategy 4 and 8, once again, even though one is a pattern and one is a directional, or I should say indicator-based tool, strategy number 8 is really overlooked many times because often you'll see a tremendous run in a stock and you'll feel like it just has no more room left to move. And strategy number 8 will identify another signal saying, yes, it does have more room to move. As we see in this example right here in SNDK. This was coming in, I believe, just the last few weeks. It's been going much, much lower. And as you can see here, someone would have said, even just halfway through this chart, boy, it's really fallen out of bed. I don't think I want to short this. But on the 15th of January, guess what? Another sell signal was generated using strategy number 8, and you still could have captured a good 10 points to the downside. So let's start out with strategy number 4, though, because those are the rules I'm going to be sharing with you in today's presentation. So you're lucky in the fact that the most popular as well as most consistent strategy, I'm giving you 3 of the core rules of this basic strategy. All right, who is this strategy for? Who is strategy number 4 for? Well, don't worry, it's for all students. We have people who've been trading 40, 50 years. We have hedge fund managers trading strategy number 4. We also have people trading for the very first time trading strategy number 4. The reason is it's such a simple strategy. It works so well any market, any time frame, and it's very basic. Everyone, no matter your experience in trading, will get the same basic format in the beginning. So it doesn't matter if you've been trading 50 years or 50 minutes, you're still going to get the same basic rules. Once you understand the rules and get the process under your belt, that's when the creativity comes in. That's when you start working with me as your personal mentor to fine-tune it to fit for you. Because some of our traders like to, as we see here in column number 2, they're looking for a quick momentum move. All right, some traders like to get in and out rather quickly. Sometimes the trades last no longer than a day if you're looking at daily bars. All right, other traders like to be in for the long haul, so that's where we teach you how to stay in much longer if you like. Other traders like to track the trades, okay, so we teach you how to do that. So this is where becoming a part of the process comes in, and you can only get this through the personal mentoring through the course, okay? Remember, it's a pattern recognition strategy, so there's a simple pattern we must look for. Unfortunately, I can't give you all the details to what that is in today's course because that's privy to the actual course. But I'm going to give you 3 of the core rules. So believe me, the format, the basic format of strategy number 4 is going to be given you today. Let's talk about some of the highlights. It's based on concepts 1 and 2. And we go over what these concepts are in the course. This is part of week 1 where we go over the foundation and the philosophy of all of our stock trading. As we stated, it's designed to catch quick momentum moves. And so that's the basic format because I learned this strategy some 30, 35 years ago on the trading floor. And remember, when I was trading on the floor, sometimes I would hold positions for no longer than 5 minutes. So this strategy was designed for that. But we've learned how to adjust it for swing trading, for monthly bars, for tick charts. It doesn't matter what time frames. You can use it and apply it any way you'd like. Now, its intensity level from 1 to 3, if 1 were the most intense of all strategies you've ever traded, or you virtually could not leave your screen for 1 moment, and 3 were the most relaxed of all strategies, where you just basically enter an order and walk away for a week or 2, it falls right in the middle. It's a number 2 intensity level. It's a very moderate strategy to trade. It only uses 1 indicator. Remember we talked about keeping things as simple as possible? We only use and apply 1 indicator. In fact, I'm going to show you what that is in just a few minutes. Remember, the beauty of strategy number 4 is it works in any time frame, any direction, and in any market. I'll show you some examples of that in just a few moments as well. As part of the course, as becoming a member of the Elite Stock Traders course, we're also including the educational buy and sell indicator. So what this does is it automatically produces either buy and sell arrows, red and green arrows, or buy and sell indications when a signal has been generated. But please remember, you see here it says educational. These are for educational purposes only. Remember, it goes against our philosophy to have you blindly take signals and blindly take trades. We do not believe in that. So that's not the purpose of these up and down arrows. The purpose is for you to check your work, for you to think that you spot a valid setup and then check to see if there was a buy arrow underneath there or a sell arrow. Once you fully understand what to look for a strategy number 4 signal, you no longer will have to rely on these buy and sell arrows. Okay, so remember, they're there for educational purposes. I've been trading this for so long, I don't even look at those anymore because I don't need to. I know when a setup is just by simply looking at it. It takes me 2 or 3 seconds to know that it's a valid setup. As with all of our strategies and with the rules I'm going to be sharing with you today, please learn them so you really fully understand them. The reason why most of our beginning students fail is because they really haven't studied and researched the rules. Even though they're extremely simple, they get so excited, they feel, and they look at the examples and they say, boy, this is too easy, I'm going to jump in, and they really haven't studied the entire process yet. So the first thing is they lose money because they're implementing incorrectly. So paper trade first, even with the 3 rules I'm going to be giving you today. Always paper trade. Our edge at specialist trading is consistency, especially with strategy number 4, our most consistent strategy today. This means 2 steps forward, 1 step back. The 1 step back is simply small losses you may have from time to time, but that's perfectly normal. That's perfectly understandable. The point is strategy number 4 at times is so resilient it will make back everything sometimes on the very next trade. All right, so here's the indicators you're going to be using. Just one, the 50-period simple moving average. That's how simple things are, okay? That's the only indicator we're applying. So your screen should basically just be blank. You can use any type of charting platform you like. You can use any type of, in terms of looking at the chart, you can use any type of bar chart. So it doesn't matter if it's a candlestick. It doesn't matter if it's an open, high, low, close, because we're looking for a specific pattern, all right? But you want to plot a 50-period simple moving average. Now here are the rules, and remember, you can write them down if you want to, but remember this is being recorded, so you can request a link to this recording. But these are the 3 rules, the basic rules. The other rules are just very simple and basic, but we're just giving you the standard format of strategy number 4 today. Works on all time frames, and remember these rules are simply reversed for sells. I'm just going to give you the ones for buy so that we can move on to a lot of examples. All right, if we're looking to buy, the closing price must be above the 50-period simple moving average. If we are below the 50 moving average, we will never buy. I don't care if it's some great news that someone tells you about. I don't care if you know that the company's getting bought out. We don't care. We're not going to buy if the price is below the 50-period moving average. So the price must close. It's okay if part of the bar is below the 50, but it must close above the 50-period moving average. Obviously, if we're going short, it must close below the 50-period moving average. Now we're going to look to buy when a price bar closes in the top 25% of its range. We're going to call this the setup bar. So all you want to do is take the extreme high of the bar, or the extreme high of the wick, and the extreme low of the bar, the extreme low of the wick. Divide that by 4, and if you close in the top quarter, that's what we're looking for. That means we have a valid setup bar. Okay? All right, so we close above the 50. Price closes in the top 25% of its range. Are we going to buy at the market? No, we're going to wait to buy. What we want to do is we're going to enter to buy when price trades 1 tick above that setup bar's high, the bar that just closed in the top quarter. But here's the real important thing where most students have problems with, and this is where they fail. They find the setup perfectly, and they say, okay, this is a perfect setup, and then they say, I'm going to buy once we trade 1 or 2 ticks above. But then they think that that's set in stone there, and they just kind of wait a day, 2 days, 5 days to wait to see once we trade above there. No, this has to happen on the very next bar. If the price bar does not trade 1 tick above the setup bar's high on the next bar, then the setup is negated. So in other words, we have to trade above there on the very next bar. We can't wait because remember, this is designed to catch quick momentum. We want to find that momentum is continuing on the next bar in our desired direction. If we don't trade above the previous bar, then the momentum most likely has ceased and we don't want to get involved in the trade. Okay, now I know this may seem a little wordy. Once again, you can request a link to this if you haven't had a chance to write all this down. Don't worry, you can watch this video at your leisure whenever you like. But let me show you some examples, some chart examples that may make a lot more sense once you see it visualized. Let's go step by step, okay? Step number one, price must close above the 50-period simple moving average. So as we look at this older chart of Amgen here, we see that price was coming down lower, all right? At this point, everyone in the world is probably saying, oh boy, okay, we have to short this. The guy in the chat room told me to short it, and it is going lower, so I'm probably going to start to sell somewhere around here because it looks like it's falling out of bed. Well, where is price? Price is above the 50-period moving average, so we're not going to short anything, all right? Even though we had one bar that closed right on the 50 and another bar that was below but then closed above, we are not looking to go short. We're only looking to buy. Step number two. Now we're going to look to buy when a price bar closes in the top 25% of its range. We're going to label this the setup bar. So we see here, we have this bar right here, the last bar that closed in the top 25% of its range. So this is our setup bar. We have a valid setup. Step number three, we're going to enter to buy when price trades one tick above the setup bar's high. Okay, but this has to happen on the next bar. If it does not happen on the next bar, then we are out of the setup. We are not interested in trading this. And now you notice here, I said price has to trade one tick. It does not have to close above the previous day's high. It just has to trade intra-bar. So here's what we want to see price trade right here where this dotted green line is. All right, so the next bar we want to see trade there. Does not have to close. This is another major mistake new students make. They say, well, Steve, I didn't buy it because it didn't close there or above. We don't care where it closes. It just has to trade there. Most of the time it will trade there and not close above. That's still okay. So let's see what happened. Well, yeah, we entered on the next bar. In fact, it gapped open a little bit, but we still entered okay. And guess what? It closed lower. Are we concerned about that? Absolutely not. We don't care. So we're in the trade. All three of the rules have been met. And let's see what happened to Amgen. Okay? See how trading is that simple? I mean, you know, this is not a tremendous gain. I'll show you some tremendous gains in just a few minutes. But it's very basic. It's very simple. It's very conservative. It's easy to implement. And you don't have to have all this room for interpretation saying, well, Steve, but you know, the institutions I heard in this trading room are doing this with Amgen. So what does that mean? Shouldn't it go a little bit lower? Or, you know, Steve, the volume didn't really go up to the moving average of its, last 30 days. See how there's too much room for interpretation and overcomplicating your trading. Keep your trading as simple as possible, and that's how you get to that road to consistency. Now, the only other rules are just a specific pattern we're looking for and your exit. But other than that, you have the basic core of strategy number 4 right here in front of your eyes. In fact, let me show you some more examples. Let's look at some recent strategy number 4 trade examples. And remember, once again, in order for me to answer any questions, I have to open up a question and answer box. I'm not even going to open that up until the presentation has concluded. So please hold off on any questions if you happen to have questions. All right, here's STZ. All right, now this was coming into the beginning of the year. This was at the end of December, beginning of January. Someone looking at this would say, well, Steve, we're just going sideways. There's no trend here, and we're just going lower, then back up, and then back down again. So I'm going to stick out of this trade. Well, actually, that's not true because there is a trend. The overall trend is up. Why? Because the price is above the 50-period moving average. So you know what to do. You know you're only going to be a buyer. You're not going to sell STZ at all. So that's rule number 1, price is above the 50-period moving average. Rule number 2, we find a bar here that closes in its top 25%. It closes above the 50-period moving average. So this is a valid setup bar. And the indicator, the automatic software indicator generated a buy signal on the 4th for the 4th of January. But we can't just buy at the market. We can only buy if we trade above. And it has to trade above on the next day. So as you can see, we gapped up and we traded above, and you had a nice close to the day. Now, if you wanted to, you could have exited in the close of the day and taken that quick profit, or you could have stayed in for 3 more days and got a 12-point gain. Now, obviously, some news came out where the stock gapped up and really had a really nice rise from, from roughly 10 points lower. But you know what? No one called us up and told us that STZ was going to gap up in the next 3 days. We got all of our cue, we got all of our information from the most important thing, and that's the chart in front of us. That's all you need to do. Remember I said, as my mentors taught me, throw away all that useless information, because if it works so well, 80% of all traders would be profitable. Excuse me. When in reality, it's the opposite. 80% of all traders lose money. So if this stuff works so well, if all these convoluted indicators, of all these news events, of all these chat rooms and trading work so well, then why the majority of traders fail? Because they're not listening to the market. Learn how to listen to the market, and trading will become a lot more consistent. How about IBM? Okay, let's go back to November. We are below the 50-period moving average. So are we going to be a buyer of IBM? No. I don't care what news event comes out on earnings. I don't care what happens in the world. I don't care what the indicators say. We're not going to buy IBM. Now, sure, it could have gone straight up. That's okay. So we missed it. We'll look for something else. But the point is, if it doesn't, the odds are in our favor to go short because it's below its 50. Now that it's below its 50, we meet the requirements for rule number 1. We look for rule number 2, and here's a bar that closed in its bottom 25%. And the automatic software that you get as a member of the course generated a sell signal to go short on the 5th, the very next day, because this was generated on the 4th. Remember, we can't go short on that day. We have to wait for it to trade below. So IBM traded below the very next day. We are in the trade short, and in 2 weeks, the stock dropped 10 points. Okay? Once again, we took everything from our knowledge of what the market was telling us. See, most of the times, the market is telling you in advance what it wants to do. Our job is just simply to listen and then jump on board. MCK, okay, once again, someone would look at this and say, there's no real trend. In fact, Steve, we're in a whipsaw sideways market, so I'm neither a buyer nor a seller. Not true. The majority of bars have closed above the 50-period moving average, so you should be a buyer. You should be looking for buy setups. You are a buyer. So if we look here, we see that the software generated a valid buy signal right here because we closed in the top 25% of our range, and we are above the 50-period moving average. But we could only have entered if we traded above it. Remember, we're not going to simply buy at the market. And it's a good thing we didn't because we never traded above it. And had we purchased it, sure, we would have bought maybe here on the opening or maybe here in the close. But look what would have happened. We had maybe 2 or 3 days of positive movement. And then this day, when we closed lower, you most likely would have scared yourself and stopped yourself out with a small loss. Okay? Much better just to say, you know what, the momentum is not there yet, so I'm not even in the trade. So negate the setup. So nothing happened according to our rules here. We wait about 3 or 4 days, and guess what? Another setup appears. We are closing above the 50-period moving average, so rule number 1 is met. Rule number 2 is we close in the top 25% of our range, so we have a valid setup, and the software generated an automatic buy signal on the 16th of December. We can go long if we trade 1 tick above on the very next day, and look what happens. MCK gained 10 points in just 1 week. So by waiting for the valid setup bar, by waiting to buy once we traded 1 tick above, we had a very nice trade. STT, okay, this is a very simple trade that happened just about a month ago. We are below the 50, so we're looking to go short. We have a perfect setup bar right here. We close at the very bottom of the day, and we close obviously in the bottom 25%. So the software generated an automatic sell signal on the last day of December. So we want to go short the market, okay? But we can't go short unless we trade below. And it has to be on the very next day. And look what happened. I'm sorry, that's not MCK, there's the typo. That's STT, fell 16 points in 1 month, okay? See how simple that is? We didn't care about news, we didn't care about earnings report. All we're doing is looking at what STT is telling us. It's below the 50. By the rules of the strategy, we just entered short once we traded 1 tick below the setup bar. Now, I want to show you this chart here specifically to show you that you can apply this to indices, okay, and to ETFs on specific indexes. Here's the IWM ETF on the Russell 2000 index. All right, a lot of people were really caught off guard by the large sell-off we had at the very beginning of the year in January. A lot of people were saying, how could this happen? Boy, it must be what's going on in China or all these high-speed hedge fund programs. There's no way I could have made a profit in that because it just came out of the blue. That's not true. Remember, when you listen to outside sources like that, you'll always have all this different interpretation why you didn't know, why it came out of the blue. If we look at the Russell 2000 index, as far back as going back into December, we knew that we should only be sellers because price was below the 50-period moving average. And if we look here, we see we had two sell signals, one on the 17th of December, the next one on the 30th of December, telling us to get short the Russell 2000 index. We didn't have to simply trade this. We could have used this as a market directional tool, all right, to tell us what to do with our other investments. And so you never had to be caught off guard when that big sell-off happened because, we can see here that IWM dropped 19 points in the first 3 weeks of 2016. The market went down thousands of points. So this was a great clue right in advance of that great market sell-off. Remember, the market is always telling us what it wants to do. The reason why most traders fail is because we don't listen to the market. We're listening to something else. Now, we can also use this intraday. All right. The beauty of strategy number 4, as you see here, is that it can be applied to any time frame. This was just this past week in Apple on a 5-minute chart. We're looking at a 5-minute time frame. Price at this point, 10 o'clock Pacific time, crossed above the 50-period moving average. So therefore, we're just looking for buy setups, and the software automatically generates the setups. And look at how you could have taken advantage of that. Now this was, I believe, yesterday, or the 20th of January in SNDK, a 10-minute chart. As you can see, we are well below the 50-period moving average on a 10-minute chart. Even though we came up to touch it, look what happened on the opening of the next day. This is why it's always best to apply the 50-period moving average to tell you what side of the market to be on. Now the market gapped lower on the opening and then started to bounce. A lot of people would have said, hey, it's bottomed out, let's go long here. No, on a 10-minute time frame, strategy number 4 add-on automatically generated a sell signal using the same rules, no matter if you're looking at a daily bar, a weekly bar, or a 10-minute bar here. And SNDK went roughly from 69.5 all the way down to, I believe, 68.5, 2 or 3 points in the next hour or two. So we showed you ETFs. We also showed you intraday trading. Now, the strategy worked well with stocks. Okay, they work, in fact, the best with stocks. But the beauty of the ones we're sharing with you is that you can also apply them. We showed ETFs, futures, Forex markets, and commodities. So you're getting all these extra bonuses by being able to trade other markets. We know a lot of traders don't just trade stocks. They trade futures, they trade Forex markets. Well, guess what? The 2 strategies in the course can be easily applied to them as well. All right, let's look at this weekly chart of the Canadian dollar. Same exact scenarios apply. We're above the 50-period moving average here. So are we going to be shorting the Canadian dollar on a weekly basis? Absolutely not. Even though it's been coming lower, we're looking for a buy setup. And here it is. Here's the bar that closed in its top 25% of its range. So this is the valid setup bar. So the software generated a buy signal right back here in July of last year, I believe. But we can't buy at the close of this week. We have to wait for a price to trade above it the next week. Excuse me. So we see that we traded above it, and coming into this year, it was 1,100 pips to the upside. I believe it's still going up higher on a weekly basis. That's $11,000 in just about 6 months. Now that's for the Forex pairs. We can also try this for crude oil, commodities, okay? I know a lot of people have been saying, boy, how could we have known that crude oil was going to be this negative, that it was going to keep going lower and lower? It's easy. If price is below the 50-period moving average, as we see here, we have a bar that closes in its bottom 25% and it closes below the 50-period moving average. Well, that's a valid sell signal using the same rules I just taught you, okay? So you could have gone short crude oil on the 4th of November. And we all know what's happened with crude oil coming into February. And the beauty of strategy number 4 is, it just doesn't give you one signal, and if you miss it, it's too bad. It always generates signals along the way. So had you missed that signal in November, well, guess what? Another one was generated just about a month ago to go short crude oil. Now we're also including 2 extra bonuses. We talked about how a lot of our students are option traders. They've been accustomed to only trading options because of their account size or just because of what suits them best for trading. And we've never really had any course or anything that is some type of liaison for option trading. Well, now we're going to devote this entire week just to applying our options to our strategies. So you'll be able to know and figure out exactly, if you're an option trader, how to use options with these strategies. There's no more guesswork or thinking, how do I do this? Or feeling like, well, this is really not for me because I only trade options. We'll show you how to apply that. So that's one of the extra bonuses. The other week we'll be talking about the ATM, and I touched on this a little bit. This was something I was introduced to roughly 35 years ago on the floor. And it's basically, the ATM stands for Advanced Trade Management. It is the best money management method I know of because it's designed completely different from other money management techniques. It's not designed for stops or for amount of shares. What it's designed for is specifically looking at the market you're trading, and it's telling you whether you should trade or not. And that way you'll keep out of the market when it's in these choppy conditions, and therefore you will keep your drawdowns to a minimum. Let me show you an example here. When the market is, very orderly and things are working great, you seem to get, with any trading method, especially with ours, you get a number of valid buy setups and a number of valid winners. As we see here, these are valid signals coming from one of our strategies that all generated profits, okay? But when the market goes into these different environments, that very same strategy, that very same market will produce signals like this, each and every one getting whipsawed and becoming a loser. ATM is designed to keep you out of these markets. So with a unique formula it does that you tally and format each and every day, you'll know whether you should be trading or not. And to me, this is one of the best things I've ever taken from the floor that really keeps me out of those bad markets. This is not something that can be picked up separately as a course at Specialist Trading or Pro Trader Strategies. It's specifically only in our courses. So along with the PET D, along with the options, along with the ATM, these are only bonuses that you get within the courses. So let's talk about the PET D. What does it stand for? It's the Primo Early Trend Detector. Okay, this is something also I got a formula from the exchange. Now, when I was on the exchange, we had to figure out this formula by hand, and it wasn't really, that difficult. It was just detailed, and because of that, I could only apply it to daily bars because it would be kind of silly for me to try and come up with this calculation every 5 minutes on a 5-minute bar because it was just too cumbersome. But with the advent of high-speed computers and with programmers, we were able to formulate this into a proprietary color bar algorithm. But we're keeping it proprietary. So here's the way it works. When you see a series of green bars, it's telling you the trend is up, okay? And when you see a series of red bars, the trend is down. That's how simple it is, okay? It's a very finely tuned trend identification tool. It's not a strategy. It's not a system. It's just a trend identifier, but it works better than anything I've used in my nearly 40 years of trading. Let me show you how it works, because the beauty of the PET D is that it tells you which direction you should be trading. Accompanied with the 50-period moving average, you'll really be in sync with the market when you apply the PET D. As you see here, all the bars are green, so even when the market has these small little sell-offs, as you see, you know you should still be long because the PET D is telling us even though we're selling off, we're still in an uptrend. Now, once you know the color of the PET D, well, you can apply any strategy to that direction. It can be the strategies we're going to be giving you in the course. It can also be any strategy that you're currently using. We'll really feel it will increase your odds for consistency. As you see here, as price was rallying and bouncing, the PET D remained red, meaning that the colors were still red, meaning that we were still in a downtrend. So there was no reason to think that we were going to change trends and go higher. That's the beauty of this particular tool. That's why I say it's so finely tuned, it will keep you in when you think that the market has changed trends, okay? Now, another great bonus about trading with the PET D is that you can apply it to long term. We know a lot of our students say, well, Steve, I also like to apply these things for my long-term investments, for my long-term portfolios and IRA account. Well, the PET D works great for that. Now here's what we ask when looking for the PET D, because as you see here in this generic chart, you'll see the PET D was in some type of an uptrend. The color bars were mainly green, and then we started to flirt with a few red bars, and then we had one more green, and then we had 3 consecutive red bars. So as you can see here, when you get 3 consecutive red bars, that signals a trend change. In this case, it signals a downward move. Now conversely, it would be the opposite. When you see 3 consecutive green bars coming from a red phase, well, that tells you that we are now in an uptrend. So how do we apply this with long-term trading? Well, here's a monthly chart of the S&P 500 going back to 1995, just a little over 20 years ago. Look at all the peaks and valleys, okay? How would you have loved to known in advance when we were going to hit these tops and bottoms and when we could get out of our long-term investments and then get back in? We had the dot-com crash back in 2000, then we had a bear market followed by another bounce up to the banking crisis back in 2007, 2008, another crash, and then we've been going straight up. But how do we know that we're not making some type of top right now, okay, with the question marks there? It's simple. All you have to do is apply the PET D. Remember, 3 consecutive bars of a different color signal a trend change. Once we apply the PET D, we see that all along the way from 1995 up until 2000, we remained green. Sure, we had a splash of red here and there, but we didn't have 3. Not until 2000, or I should say 2000. Yes, the end of 2000. That could have gotten you out of the market, and you would have missed this nice sell-off here we had, this bear market, I should say. Once we had 3 consecutive green bars, you're back in the market in 2003. You could have ridden it all the way up until 3 consecutive red bars here in 2007. You would have missed the great banking crisis. You would have missed everything because you would have been in cash out of the market. Then in 2009, 3 more green bars appeared and you're back in the market. Now sure, we've had a couple of red bars here. Here's 1 bar, here's 2 red bars, but we haven't seen 3 consecutive red bars until possibly now. Here's a current chart coming into 2016 with 2 red bars, okay? Are we in a bear market? Did we have 3 consecutive red bars? Should we be totally out of the market? Well, you need to have the PET D to know that, and that's what you're going to be getting in this course, okay? Now, another tool you can use with the PET D is how to confirm your trade. So let's say you're just trading daily bars or even intraday bars. You can use the PET D as a confirmation tool. This is what we call our dynamic duo with strategy number 4. You're getting that included in this course. Let's look at this older chart of Twitter. Now we have 2 valid buy signals, okay? One here and one here. We're above the 50-period moving average, and they both worked out rather well. But let's just say you're a little bit worried about the market, you're a little doubtful. How would you have had the extra confidence to take the trade? You simply apply the PET D. And if the PET D colors the bar green, meaning up for a buy signal, well, then it's okay to take the trade. So if we would have added the PET D, we would have seen that both these setup bars were colored green. So that would have given you the confidence to take both of these signals. You see how simple that is? This is our dynamic duo. The PET D confirms the setup bars. Now conversely, if you get a sell signal, that should be colored red. If it's not colored red, well, you don't really want to take that trade because you're not going to have a high level of consistency as you would when you combine the two. So you can do this with strategy number 8. You can also do this with strategy number 4. Now, here's another example. Some of the best trades are the ones not that we just take, but the ones that we don't take because we sat out of a losing trade. Now here was a valid buy signal generated by strategy number 4, okay? It was a valid buy signal and it would have turned into a large loss, okay? Here's another one that would have most likely turned into a loss if we had taken it. But let's apply the PET D. As we see, in order to take the trade, the PET D needs to color buy setups green. And what color is the buy setup? It's red. So you would not have taken this trade. You see, the PET D acts as a great filter, keeping you out of losing trades because it's such a finely tuned way of sensing the trend. And the PET D was still sensing that we were still in a downtrend, so it says don't take the trade. So you would never have had this trade, you would not have lost this money. Now another way in which we kept out of this trade was, well, the PET D colored this one green, so you actually would have taken this trade. But here's where our rules and our requirements often keep you out of trouble, because remember, the requirement of rule number 2 is you can only buy if you trade 1 tick above. Did we ever trade 1 tick above? Even though it was confirmed by the PET D, we never did, so you would have bypassed this losing trade as well. So see, that's the beauty of our setups, our trades, of our added bonuses, because not only will they get you into high consistency trades, but they'll also keep you out of low consistency trades as well. Now you can also apply this to indices. Here's a great example of applying this to the Dow Jones Industrial Average. Now we know you're not going to buy and sell the entire average, but you could use this as a market timing tool. Now this is going back this past year. As we see, we had 3 consecutive buy signals that were all confirmed by the PET D. The PET D colored them all green. And each and every time, you would have had a nice rally in the market. So that was a great signal telling you it's okay to be long the market. Maybe you could buy something, another issue where you were interested in purchasing, okay? But now coming here into August, guess what? We had a buy signal in the industrial average, but it was colored red. Therefore, that's telling us that even though the setup is meeting all the requirements to go long, it is not being confirmed by the PET D. The dynamic duo is not confirming, so don't take this as a buy signal. Whatever stock you wanted to trade, or if you wanted to purchase options to the long side, don't do it. It's better just to stay out, and it would have been a good deal if you did, because look what happened to the markets, okay? That's how finely tuned the PET D is and how it will really help you in becoming a consistent trader. All right, so before we go to question and answers, let's go over the curriculum one more time. We're going to go over the foundation and the building blocks of stock trading, go over our entire philosophy. We'll go over in week 2 strategy number 4. I've shown you the basic format of strategy number 4. We'll go into a little bit more detail and how to use different exit points, different stop placement, and different entry points as well. Then the next week we'll do the same thing but with a different strategy, strategy number 8, one of our most undervalued strategies. It works tremendously well, especially in very strong trending markets. Week 4 will tell you all the multitude of different ways in which to apply the PET D. Week 5 will devote the entire class to option trading, show you how you can devote trading options with these strategies and with the PET D if you'd like. And then lastly, the week 6 will talk about advanced trade management. We'll give you that formula for using that advanced trade management, show you how to apply it to your own particular trading, and then we'll put it all together with any questions that you may have. Okay, so 6 weeks of live trading with me as your personal mentor. Another thing you get that we didn't go over, once you understand the full process, you are going to be receiving nightly signals. But remember, these are for educational purposes only. You'll be receiving emails such as this. Here was one that was emailed to our course members on the 22nd of January, just a few weeks ago, for trading on the 25th. And as you see here, ES generated a buy signal. Strategy number 4, buy signal. Okay, so if we look at the stock, we are kind of flirting above and below the 50-period moving average. But here's the buy setup right here. Now we close above the 50, as I taught you in rule number 1. Rule number 2 is we close in the top 25%, and the software that you will be getting generated a buy setup on the 22nd. But remember, we can't go long unless we trade above. But let's just say, okay, well, I know all the rules. I'm just a little bit gun shy. I'm new to this. I've never traded like this before. I've never, been in charge of my own decision making. I need a little bit more confidence. Okay, that's where the PET D comes in. You're going to get the PET D with this course as well. All you have to do is simply see if it's being confirmed by the PET D. So you add the color bar tool, and guess what? It colored it green. So that will give you the extra confidence to take the trade. Is it guaranteed to be a winner? No, absolutely not. Nothing is guaranteed in the markets, but you've just increased your odds for success. So feel free to take it, and as you can see, ES went higher into this week, okay? And in fact, I think it went even higher into today as well. Now, here's another example. This was generated on the 25th for trade date January 26th, just about a week or so ago, okay, last week. As you see here, CELG generated a strategy number 8 sell signal. Let's look at the chart. We are below the 50-period moving average, which is the same rule that we use for this particular strategy, and the automatic software, which we will be receiving as well, generated a sell signal on the 25th for entry on the 26th, okay? Once again, let's say you're a little bit nervous, you're not really sure you want to take the signal. All you have to do to give you that extra bit of confidence if you want to take the trade is to add the PET D. And all sell orders have to be colored red in order to be confirmed by the PET D. So let's add the PET D, and as you can see, all the bars were red except for the previous bar, but we don't care about that. We're only concerned with the color of the bar of the setup bar. So since it's colored red, it would have given you the confidence to take that trade, to go short. And the stock went roughly from 106 all the way down to 94 in the next week. Okay, this was just last week. So this is the way it works. Remember, these are only for educational purposes, but once you understand the process, after a week or two, then we start furnishing you with emails overnight just to have you check your work to know what to look for. Here's what some traders are saying through our first course that we gave. Tons of testimonials, people trading for the first time, but I want to read you one that came from a hedge fund manager. What he said, he wrote us, was Primo's mentoring has been a cornerstone of my career over the last 25 years. As I type this note, 26 of 40 positions in our portfolio are from a swing trading strategy of Primo's that I specialize in. Primo's greatest gift was separating me from my emotions and teaching me to listen to the market. Remember, that's what it's all about. Learning how to listen to the market. Most of you have probably never done that before. I know some 39 years ago, I didn't either. I was listening to all the things, the conventional wisdom I had been taught. But what you're going to get in this course are tons of information, 39 years of experience, and I'm going to teach you how to be non-subjective, how to be consistent, how to keep your trading simple, but most importantly, how to make you a part of the process, something you've probably most likely never done before in your trading. All right, so before we go to questions and answers, let's recap. Here's what you received: 6 weeks of trading tools and techniques, 2 of our best proprietary stock strategies in terms of consistency. We're going to teach you exact stop placement, exit placement, and profit targets. We're going to give you the PET D, the color bar algorithm that I learned on the trading floor, nightly educational signal services. This comes with the add-ons as well. You're also going to get extra bonuses, the option trading class, where we devote entirely to trading with options, as well as the next class, which is devoted to the ATM, that's Advanced Trade Management. Remember, this comes with 39 years of trading experience. I'll be your personal mentor, so that any questions you have, you can ask me. And also, once you become a member of this course, you're a member and a student of mine for life. So it's not something that, well, after the 6 weeks are over, that's it, good luck, we'll talk to you later, hope you do all right. No, you're always going to be able to correspond with me because you're always going to be a student of mine. All right, so this is the Elite Stock Trading College, okay? You're going to get instant access, and trust me, you're really going to, after you've seen all this, after you've seen the jam-packed information, all the extra bonuses, as well as the detailed instruction, a year from today, you will have wished you became a member of this course. Can you wait any further to get your trading on track? Have you been struggling the way I was 39 years ago? Can you wait any further? It's because I learned all these things that I'm going to be teaching you that I was able to keep my trading going for the next 39 years. I honestly think if I didn't learn these, if my mentors had never taught me these same things I'll be teaching you, I probably most likely would not be trading today. So a year from today, you really will have wished you became a member. Here's how to become a member of the course and a student of mine. We're dropping the price down to all the attendees today, down 10%, down to $44.95 from $49.95, okay? The beauty of this is we realize all of you can't make that lump sum payment, so we're going to have payment plans available. All you have to do is contact Pro Trader Strategies. You can put together some small deposit, and you can be up and running and be a member of the college course, okay? Remember, this includes 1-year trade signals, okay? But that's for a limited time only. So here's how to take advantage of this. Contact my sister site, which is Pro Trader Strategies. They are in charge of all of my promoting and the selling of my courses. There's their email address as well as their phone number. You can contact them to set up any type of a payment plan. And I think as you look in the bottom there, you see that that is the link to go directly to the sign-up page. All right, but that's not a live link. If you want to, you have to simply copy and paste that, and that will take you to the sign-up page. But if you look on the far right-hand corner in the chat box, I believe Pro Trader Strategies has posted the actual live link there. So simply click that on, and it will take you to the sign-up page. But if you'd like to set up some type of payment plan, just contact Pro Trader Strategies. Email them. Probably best to contact is to call them. And you can work out some type of small deposit, and you can be up and running ASAP, okay? I'm going to leave this information up for you so you can write it down or copy it down, and I'm going to open up the question and answer box. And I want to thank you all for holding off on asking any questions so that we can answer them now, okay? Let me go back to the beginning. I don't want to skip anyone. Dear Stephen Primo, I learn something new every time when I attend your webinars. You are my newbies. You help newbies like me. Okay, I'm glad I do. Let me see here. I kind of lost that for a second. Excuse me while I find that again. Apparently that was from a new trader. That's good to know. When I find that email, there's tons of questions here. When I find that, here it is. I'm sorry for the delay. You are my hero, and I thank you how you've helped newbies like me. All right. Uh, word could not describe how I appreciate you, and thank you for the help. You rock, brother. Oh, you're more than welcome. This is for Naran to you, Barbazol Naran to you, a student of ours. And I'm really sorry. I'm getting so many questions. The lines keep changing, so it's hard for me to follow them. But this is just, an unsolicited testimonial from someone. And remember, I just want to state, all I'm doing, I don't have any magic system, any magic technique. It's just I'm teaching you the same things that turned my trading around. All right, there's nothing in here that is so revolutionary that no one's ever heard of before. It's just the basic things that have stood the test of time, because these are the things that work. Unfortunately, myself included, we were all taught that we have to use conventional wisdom, all these convoluted theories, support and resistance, listening to every economic news report, every type of indicator, and those things really have no level of consistency in them. I found that, and so the reason is I've been able to trade for nearly 40 years is because I use the same things that I teach all of my students, okay? So thanks for the kind words, okay? Let's see, let me go to the next one before it skips over. Ashraf says, what you were saying is great, but how about the support and resistance walls? How about the sudden and unexpected reversal of trend? It's a great question, Ashraf. First of all, there is no consistency in standard support and resistance. The reason is, and I know this firsthand, is because all support and resistance is at some point there are more buyers keeping up a specific price level than sellers. And resistance is meaning that there are more sellers at some price level, more sellers than buyers, okay? Now, for you to try and base your trades based off of those is silly, because all that means is that there are buyers there at a moment. From being a specialist, I used to see where these buyers were by having a book in front of me or seeing them in front of my post. But did this guarantee that those buyers were going to stay there for 5 days, 5 weeks, or even 5 minutes? No. Many times there would be buyers create a support level and then the next day say, well, we're no longer buyers, we're pulling out. So what happened to the support? That's the inconsistency in trying to base your trades based off of those. So we don't use conventional support and resistance. And if you're concerned about these large swing moves, these these changes in trend, that's where the PET D comes in. Okay, the PET D, as I've shown you in a number of examples, will tell you in advance many times before these big swing changes. Remember the example I showed you with the IWM, the ETF, just 2 weeks ago on the Russell 2000. All right, the Russell 2000 was telling us in advance, weeks in advance, that we were going lower. All right, there was a tremendous swing change move in change in trend in the beginning of January. Well, how did we know about that in advance? Okay, it's because we listened to the market. The PET D, as well as the 50-period moving average, as well as our setup told us. So there's no reason to rely on those things that are antiquated and that have no consistency in them. Okay, this is what we teach you in the course. Kenny asks, does it only work on daily or can you use it on 5-minute bars? No, Kenny, I showed you different time frames. I showed you weekly time frames. I showed you 5-minute time frames as well. It also works on tick bars. It works on range bars. So it doesn't really matter what type of time frame you're using or what type of bar chart, okay? Michael is asking, do I have to subscribe to your charting service or can I apply your software to other charts? Michael, you can apply it to your own charting software, but it depends on which ones you have. In other words, it'd probably be best to contact Pro Trader Strategies to see how the add-ons and the PET D and the different signal services work for your particular charting platform. But most of these work on all of the major charting packages such as MT4, TradeStation, Metastock, etc. Okay. Larry says the PET D is a problem for me. I'm colorblind. Well, you can change some of the colors and the problems instead of red and green. I showed you red and green, but many times, depending on your charting software package, you can change the color of the PET D. Once again, I would contact Larry, the tech support at Pro Trader Strategies. They can help you with this. Okay. Let's see. Larry was referring to the charts in the presentation. Everything seems to be black and white. I'm sorry, Larry. This is a PowerPoint presentation. We've never had any problems with this. I'm sorry that, but we can't change everything just for one person. But if you want to actually have a recording of this, maybe you can stop it and look over as many times as possible. That will help you. Okay. Jeffrey is asking, what is a tick? A tick is just simply a unit of measurement. So in other words, let's say you're looking at a stock, it's priced at 50, okay? The next tick would be 1 cent higher, 50.01, okay? That's one tick above. 50.02, that's two ticks, and so on, okay? So it's different for every market that you trade. By market, I mean futures, currency pairs, but since we're only focusing on stocks, a tick is just basically 1 cent, okay? If you're trading a $70 stock, 69.99 is one tick lower than 70. It's really simple. If you're having more difficulty, just contact your broker. They should have information to help you with that as well, okay? Steve is saying, how do you compare this 1-bar setup versus using a candlestick and the bullish engulfing pattern 2-bar setup? Well, Steve, the bullish engulfing pattern is a separate strategy that isn't at all included in this. That's mainly looking at candlesticks. If we're trading candlesticks with strategy number 4 and strategy number 8, the rules can still apply. Remember, we're not taking our cue from a candlestick pattern. We're taking our cue from another pattern, which we teach you in the course. But you can apply any bar chart you choose because it fits. We're looking at another pattern. Just because you have a candlestick, most people say, well, that means I have to look for a candlestick pattern. No, this pattern has nothing to do with candlesticks, but you can still apply it with a candlestick bar, okay? So they work fine. I just showed you that specific example with the Canadian dollar on the weekly chart. That was applying a candlestick bar. It had nothing to do with an engulfing pattern or a doji or a dark cloud cover. It had nothing to do with it. It was using the pattern that we teach you in the course. Okay? Carrie is asking, what is the minimum number of ticks needed in the bars range to be in the top 25%? Rule of the range, 4 or 5 ticks? Yes, Carrie, that's really up to you. Obviously, if you're looking at a range of a bar that only has 4 ticks, you only need 1 tick, but that would say it's too much. This is basically, something that you see off of experience, off of your own insight. I would say at least, yes, about 4 or 5. Some traders like to have at least 10. It's up to you because that's not a full steadfast rule, but obviously you want to just off sight see a bar that has, enough range in it, which would be, roughly about 10 or 20 ticks, okay? Let's see. Let me scroll down to some more questions. I hope I don't skip anybody, but we've got a ton of them. Philip asks, well done. Can it work for the Aussie stocks? Philip, personally, I don't trade Aussie stocks, so I can't say from personal experience. But we have had members before who do trade the Australian market. We've never had any complaints. We also have members who trade the Indian markets. I've never traded either of those markets. They use the exact same strategies, the same rules, the same PET D, and they've reported fantastic results. So I would see no problem why it wouldn't, okay? Richard asks, what order type would you use to enter a long call option if underlying trades 1 tick above setup high? In other words, a market order that means you may need to watch the market. Yes, we're going to go over that in the course. Obviously, it would be the best if you could watch the market. If you could watch the market and just enter at the market. It's up to you. I know that some option houses let you use stop orders, entry orders, some don't. So we'll cover this all in the course to see what the best would be for you, okay? A lot of times you can receive alerts when that price is met. So if you're not able to be in front of your computer, you can simply enter an order then. But there's lots of different options, and we'll go over that within the course, okay? Lynette asks, how is using this with day trading? It works fine. In fact, to be honest with you, most of my trading now, because of my schedule, is with day trading, and I use all of these with day trading. So trust me, I'm still trading after 39 years, and the majority of my trades are with day trades. So it works great. And remember, it doesn't have to be a 5-minute chart. It doesn't have to be a 10-minute chart. It can be a tick chart. It can be a range bar chart. So there's lots of different ways to use it intraday as well as daily bars. Let me see here. Let's go down a little bit more. say when you say the pet D would save you from a trade by turning red or green depending on the direction of the 50. Well, let's see, what we say, it's not going to save you from a trade because that would mean it's guaranteed. What we're saying is once you get a setup with the strategy, okay, which takes into account the 50-period moving average, which takes into account all the things I taught you today, that has a high level of consistency. If you want to increase that level of consistency, add the pet D. This is why we call it our dynamic duo, one of our most popular courses. Why? Because you want to see the pet D confirm. It's just a confirming tool. It's not saving you from a trade. It can at times, but it's just confirming that you should be taking that trade. So if you get a buy signal that has been already confirmed with the strategy, you want to confirm it again with the pet D. And that should be colored green. Once you have those two things in place, that dynamic duo, you've increased your odds for success, okay? Now conversely, if you're selling and you have a sell signal, you want to add the pet D to make sure that that setup bar is red. If it is not red, I would not take the trade. And I do this on a daily basis. If it's not confirmed by the pet D, I don't take the trade. That's how much I believe in this. I use these things myself on a daily basis. Remember, everything you're getting are the things I use, okay? Let's see. Ashraf is still asking, how can I use your ways with these walls? Well, first of all, we don't believe in the walls, Ashraf. I mean, they're an illusion. One trader's support is another trader's resistance. I just did a presentation this past week showing you the inconsistency in support and resistance. Remember, I traded this way years ago. I used support and resistance, and guess what? It would work great for 2 or 3 trades, and then I would give everything back. Now go back and look at your trading. See how successful it's been with using support and resistance. Well, if you've been successful, or if you have moderate level of success, what we're sharing with you in the course will only heighten that level of success. So it's not going to get in the way. It's going to heighten it, okay? Now, if you've been having a terrible degree of success trying to apply support and resistance, then let it go. I did, and trust me, it wasn't until I let it go that's when I started to become consistent. So if you haven't really done very well, just let it go. Don't trade support and resistance, and use what we teach you in the courses, and you'll start to see, boy, this is what I've been missing. Remember I said a year from today, you will have wished you took this course, because most likely if you don't take this course, you'll be sitting here a year from today in January 2017 saying, gosh, here's the new year, and I finished it worse than I did last year. I wish I had taken that course, and they're not offering it anymore. Okay, so just know that we really feel strongly about these techniques. Okay. Let's see, is there a refund policy? First of all, Philip, no, there is no money back refund, but what we do is we'll be happy to allow you to exchange it for anything else we have, any one of our courses, any other one of our techniques, if you change your mind within 30 days. But we really don't think you will, okay? Because what you're going to be getting in the course is nearly 40 years of experience. And, even though we're giving you this in good faith, all of the rules, everything, full disclosure, we don't know if you're going to turn around and sell it and say, boy, it didn't do anything for me. So you'll still get to keep the information, but we, what we'll do is we'll exchange it for anything else that we have. We don't believe in money back guarantees because you just got all the information there, okay? Joanne is asking, how well does this work on the FX with lower time frames? Does it work better in daily and weekly? Joanne, it works well in any time frame, in any market, like I stated before, okay? It works. We have traders who use this on the Forex markets on tick charts. We have traders who use this on the Forex markets on weekly charts only. So it works great. And here's the beauty of this. Once again, as a member of our stock course, you can apply these to the other markets. So if you like to trade both, it's great. You can use them in both markets, and you can get the instruction and apply it to both markets, okay? Let's see, let me scroll down to some more questions here. Let's see here. Do we attend the class webinars or just read the books? No, we teach you the proprietary information in the class. It's a live class. We teach you all this. You're in class with me, just as we are here now. and we have question and answers, and we go over everything. And then you have personal correspondence with me as well on an individual basis. And you get recordings of all the classes if you aren't able to make them. We realize some people can make some classes, others they won't be able to make. We're going to figure out what the best time frame is. Last class we had people in Europe, we had people in Australia, we also had people in the United States. So we picked what the best time was that helped everyone. And then we had the classes, okay? But we realized not everyone is able to make each and every one of the classes, the live class, so we record everything so that you can watch it at your own leisure, okay? Remember, if you want to get the recording of this particular session, just contact Pro Trader Strategies. They will send you a link. Let's see, Edward says, for the PET-D to confirm, don't we need 3 bars of time color, or is a 3-bar requirement just to confirm a change of trend? No, you need just 3 bars to confirm a change of trend. So the question is basically saying, they're confusing the confirmation of strategy number 4. For strategy number 4, you just need to confirm the setup bar because it's a confirmation of the strategy. But if we're just looking without any strategy to find out what the trend is, we want to see 3 consecutive green bars or 3 consecutive red bars with no strategy included. We're just looking to see what the trend is, okay? All right, I hope that answers your question. We're getting just about to the end of this, okay? And I really want to thank you all. It's a live class that we're going to be getting, 6 live classes, 6 weeks of instruction. Best of all is we have the added bonuses of option, a class devoted to option trading, another class devoted to the PET-D, another class devoted to the ATM. These are all extra bonuses. So if you really want to get your trading on track for 2016, it's not too late. Even though we're into February already, it's not too late to get it there. And the best thing is we realize that not everyone's going to be able to come up with this lump sum of $44.95. We have payment plans. So contact Pro Trader Strategy, my sister site. They can set up a payment plan with you really simply, really easily, and you can be on board for the first class, okay? We're going to probably be holding the class sometime in the future within February. We haven't set the date yet because we're still getting people signed up, but we'll keep you all informed and we'll let you know this. But remember, you will be a student of mine for life, okay? This is not something that after 6 weeks, it's goodbye and good luck. You're still with me for life. So as long as I'm on the planet trading myself, you'll be trading there right alongside of me, okay? In conclusion, I want to thank you all for attending today. I hope you got something out of this. I hope you can use those 3 basic rules. You can apply them. Just paper trade them first so that you fully understand the process. So enjoy them, and I look forward to all of you becoming students of mine and members of the Elite Stock Trader course. Thank you so much. I'll see you next time. Bye-bye.